Good afternoon, everyone. I'm Steve Sabaji, the IRA specialist here in the Dallas office, coming to you live today. And we've got a great presentation, something that's very timely, and I think that's going to be to interest of a great many of you. We're going to do a little panel discussion today, something a little different than just a straight up presentation. But we've got Joe Robert and John Denza, who are two of the biggest crypto authorities that are out there. They're going to field some questions that we've accumulated for the discussion. And of course, we invite you to throw some questions in there. I also have with me today the fabulous Nicole Bako, who is moderating our panel today, or our chat box today. So I'm sure she'll say a quick hello in the box. And again, we'll be fielding your questions. Before we get started, let me just do the little intro for who we are and what we do at Quest Trust Company. All right. So, as many of you know, Quest Trust Company is the largest self-directed IRA custodian in the state of Texas, but we are a nationwide organization with more than 20,000 investors in all 50 states and even in a couple of different countries, as a matter of fact. Currently, we have about $2 billion under administration and over 100 employees that work for Quest, a third of which carry what's called a Certified IRA Specialist designation. That's a very precise designation. It's something that's awarded by the American Banking Association, and it does show a level of education, study, and examination that each of them have gone through, which gives them added expertise in the field of IRAs. Now, one thing that I'll just say as a side note with respect to the CISP is that you might expect it to be largely concentrated in our sales team or our marketing people or a certain segment, but it's actually a wide swath of people throughout the organization who have it. That would be our transactions team, our AP. I mean, it's everybody through the organization has exposure to this, which means throughout our organization, you're going to find that extra level of expertise. The last thing I like to mention is that currently our clientele right now is sitting on about $400 million in cash. That means we have clients looking for deals. So if you are looking to get funded or looking to borrow, the opportunities are there. They're available for you, and we make them available through the various networking platforms that we have. So check it out. And let me just also say that our presentation today and the information provided is really here for educational purposes only. At Quest, we don't provide tax, legal, or investment advice. And you always want to do your own due diligence before entering into any deal, and perhaps consult with your tax, legal, and or investment advisor. Now, basics on a self-directed IRA. First of all, I can tell you, self-directed, as it pertains to IRA, is just a marketing term. IRAs are the same no matter where you go. Roth is a Roth, a traditional is a traditional, and so on. The distinction and why we use the term self-directed is that it means that you really are the one in control of what the investments are in your IRA. So, like I said, there's no big difference. So the diversification is still available to you. The tax savings is still going to be a part of this IRA, but there are a couple of ways in which they are different. Now, the self-directed IRA gives you that opportunity to invest in the things you know best, because you are the one truly picking the investment. It's not some portfolio manager that works out of a company that you never go to or never see and picks things that maybe aren't consistent with what you would want. You are the one in control. Now, the last thing, it's something I think of as being a social investing element that goes along with a self-directed IRA. And I'm using the phrase social investing in a little different way. I think we've all heard of it. It has to do with reducing your carbon footprint and those kinds of things that are traditionally associated with social investing. But I'm talking about actually rebuilding and improving your community. I mean, when you do a fix and flip, you're taking the ugliest house on the block and you're making it beautiful. Same if you were lending money to somebody who's going to do the same, or you're investing in a syndication. Their purposes are all the same, which is to build something up. And while they're doing that, remember, you're injecting money into the economy because you're sourcing your materials locally. You're hiring people locally. You are doing more for the localized community and economy than I think with any other investment type that's out there. Now, as I said, IRAs are IRAs are IRAs. So any type of IRA you can get anywhere else is exactly the type you'll find here at Quest. So that ranges from the personal side, which could be a traditional IRA or a Roth IRA. And the traditional is typically what we also refer to as the rollover IRA. It could be a business plan, like a SEP IRA, a simple IRA, or even a solo 401k plan. And then we also incorporate these specialty accounts, the health savings accounts and the education savings accounts, which has some very unique features and unique tax benefits, especially in that they can provide tax-free distributions for their stated purposes. So if you're interested in learning more about these accounts, contact us, ask for me, ask for Nicole, ask for any IRA specialist. And if you're interested and want to see if you're eligible to use these types of plans, we'll have that conversation. Now, in terms of the choices, remember we said we can invest in what you know best. So that comes under a wide swath of things. It could be real estate, a hard asset, a fix and flip, a rental property, an Airbnb, a tax lien. It could be syndication deals under private entities. In fact, the crypto that we're going to talk about when you do that through Quest is in the form of a private entity. And then it can be that personal lending. And again, it can be secured, it can be unsecured. Doesn't have to be secured by real estate either. I've come across some very unique situations that I've heard of with collateral that's been used in various loans. I think my favorite that I heard about in terms of collateral was ammunition. No kidding. All right. So at Quest, again, education is one of our most distinguishing factors. We are always doing webinars and live presentations and other things to try to help people with their education and with their networking. So among that, we have classes like this. We have our Tuesday class every week. We have webinars that pop up in between, and we still are offering our virtual happy hour. It's going to be every fourth Wednesday of the month. Nicole is actually the one who hosts it most of the time, but check it out, especially if you aren't able to attend live events. That has been a great source of networking for our clientele. And just remember too, any and all of our webinars are archived on our YouTube channel and our Facebook page. So if you miss it, you won't miss it. Wrapping up, we've got our self-directed IRA socials that we are doing live. Once again, they are every first, second, and third Tuesday of the month. First is Houston, second Austin, third is here in Dallas. So if you are in any of those areas, please register, join us. And if you missed this month, you can catch us next month. Also, it pays to have friends. And lately, I know personally, a lot of the new clients I've been bringing on have been coming by way of referral. And the referral is a nice win-win. There becomes a discount of $25 off the account opening fee for the person who is referred, as well as back to the person who referred that new client. So two-sided benefit to that. Again, call us, ask us about it, or if you're bringing a friend over, don't forget to tell them that you sent them. All right, going to wrap up real quick, and then we're going to get started on the panel. Just wanted to let you know with that QR code that you see on your screen, That will access the IRA specialist calendar and allow you to set up a time for a consultation. We will call you. You can always just get on the chat box with us. You can give us a phone call or just shoot us an email at iraspecialists@questtrust.com. So that's all I have for that portion of our presentation. All right, we're bringing up John, and we have Joe. How are you guys?
Steve, thanks for hosting us.
Not a problem. Yep, glad to have you. So there's been a lot of things happening in the crypto realm these days, right?
It's been an active space.
That is about the politest way I can think of saying it. That is definitely the case. So we've got some questions that have been collected prior to this. So we're going to start with a couple of those, if you don't mind. So why don't we just jump right in? So the first question, which is kind of a straightforward, basic question right out of the gate. Talk to us about the easiest way to buy cryptocurrency.
Yeah, I'll start at least on the side outside the IRA account for those that may be investing outside the IRA. The easiest way typically might be to go to coinbase.com, where you'll typically put in your name, email address, set a password. Once you have that account set up, you're going to have to provide your information like driver's license and so forth and go through the KYC process and then connect your bank account. And you can send over funds via ACH and get started that way. Pretty quick and simple. Usually takes less than a few days. And on the IRA side, John can let us know there.
Yeah, of course. So just to kind of discuss the Coinbase account opening and so forth, it is really straightforward. Some personal information needs to be provided to make sure that you're not a nefarious actor. But one thing that I would actually petition the audience to do before they're actually looking to onboard with a Coinbase, an FTX, whoever it may be, is make sure that the accounts are actually segregated, because there's a lot of exchanges out there that don't segregate their accounts. And that's kind of some of the issues that we've seen develop over these last couple months. And what I mean by that is, God forbid there's an event, a technology hack, an outage, whatever it may be, and there's a disruption. And next thing you know, there's secured creditors that are looking to be compensated for that because there's an issue. Well, if the accounts aren't segregated, you're an unsecured debt on the books of that exchange. So you need to be careful and make sure that the accounts are completely segregated. That's something we actually pride ourselves on at ErisX, that we've always, with our regulated clearinghouse, we keep customer accounts separate from the rest of the exchanges accounts and funding and so forth. So from the IRA space, we actually make it relatively easy. Similar to the way Joe described it, you can go onto the website, you can register from an IRA standpoint. You can also do the same to register if you're a direct member. You come on board, complete a couple of questions, provide some personal information. Stocks will flow back to Quest Trust. They approve them, comes back to us, and then we would actually forward the credentials. And to take it a step further, if you have an entity account like a LLC or a solo 401k, it's just a slight different variation. So you would actually provide the name of that entity account, your custodian, and jurisdiction you're located. And then I could actually forward you a copy of our DocuSign packet. And then you'll be able to be onboarded. And the benefit of the entity account over the other is greater flexibility. So with that entity account, you could withdraw or deposit coin into the account.
That's great. Those are excellent points you make as well on that. Speaking of IRAs, we all know that there are the tax advantages of using IRAs for any kind of investments. Do you think there's something inherently unique about using IRAs and using it for cryptocurrency itself? Would you say there are some pros, cons, anything that you would say is distinguishing in that?
I mean, for me personally, over the last few years, I've been using a IRA owned LLC to make investments in the crypto space. And I currently hold crypto and investments in other funds. So typically that's passive in nature. And when you're buying and selling crypto, that because it's real property, it's treated as capital gains, and therefore it's in the IRA. It's a tax-free benefit.
Right.
Just to kind of expand on that, I would just say, I'm not an IRA specialist, but obviously there's there's benefits to being able to use your Roth. Some of us have actually heard of what happened with Peter Thiel's account, with him having a Roth account. Obviously, if you're looking at crypto from a long-term play, there's real benefits from a tax advantage. If this is an asset class that you think is going to be, very popular in the future and mainstream, 20 to 30 years of growth is definitely a plus.
Agreed. So I have to admit, I'm not necessarily the biggest crypto investor. I'm still learning about it. So this question, hopefully I'm asking it correctly. But the question is, do all crypto investing platforms offer cold storage?
Good, John.
Yeah, I mean, you just need to do your due diligence. I wouldn't say that all of them offer cold storage. Most
Could you
likely,
just expand on what cold storage is?
Absolutely. I mean, the simplest way to think about it is that your coin is completely separated from the internet. It's what's called air gap. So let's think of it this way. If you're a retail person like myself, you might go out to a Ledger or Trezor or whoever it may be, one of these retail providers, and it's like a little thumb drive. You plug it into your computer, the coins move over onto the thumb drive. Somewhat, it's in the blockchain still, but it's completely air gapped and separated from the internet, so nobody can technically hack into it.
Got it. Okay. All right. Let's just dive right in. What's happening in the crypto market right now?
And I guess before we jump on that, like maybe to give some context to people on that, because I think people get confused. Sorry.
Yeah, please do.
And one may be like, right now you could currently log into, let's say, your Venmo, PayPal, bank account, right? And then you could send, I could send money to John, right? It's pretty easy. But what it means is it's accessible, meaning someone could hack my account. They could hack my password. It's online. Now, where maybe I have this $10,000, I go to the bank. I have a set of keys. I open up a safety box. I put it in there, right? It's offline. The keys are offline. You don't have access to that for somebody online to be able to steal those assets.
Okay. So it does make the whole process a lot more secure and can alleviate a lot of concerns that clients otherwise may have.
So when it comes to, like, as you mentioned, the cold wallets, most exchanges all provide, institutional accounts, and most of all the institutional accounts offer cold storage specifically for institutions for this simple purpose, is that they're typically a long-term holder, and then they want those keys stored offline.
Mm-hmm. And is this opposed to any other way that crypto companies might store the currency? Are there different ways that it's done typically?
Yeah, there's different types of wallets, in the sense that there's a hot wallet and a warm wallet and a cold wallet. I mean, the temperatures almost give you the level of security that you would actually have in each of them, but it's also accessibility. So if you're in cold storage, think about it. You've got to take it out of cold storage, move it into a warm wallet, and then move it into a hot wallet and make it accessible. So there's a couple of different steps. And also too, when you're with some of these larger exchanges, they all have their own proprietary formula about how much is going to be in cold and how much will be in hot at any time. Okay. And on average, I think it might be even 6 to 7% is only in hot at any time, and the rest is actually held in cold storage.
Okay.
And also, I think we have a question here from Athena. With more and more companies getting hacked, it concerns me to have money in crypto. That's a good point, right? And that's kind of what we're talking about, this hot and cold storage. So typically when you're setting up your accounts at these exchanges, there's best security practices that you should probably learn ahead of time and go through. And that's like setting up, your passwords. A lot of accounts you can use a YubiKey as a two-factor authentication. So you should go beyond the regular means and set up these two-factor authentication across all your accounts. If you have a lot of money, that's where you're probably going to look to store it, in that cold storage or offline. A lot of these hacks occur because of the human aspect of it, meaning, people provide a key to their wallet when someone's trying to phish them. And so really just learning those best practices will help you from getting any of your crypto hacked.
Yeah, I agree. And then we actually take security a little bit a step further too with us, where some of the other competing exchanges might have you have one password to log in. We actually have two, one to get into the system and one, a completely different one if you decide to withdraw a coin off of the exchange too. So it's an extra level of security. So if somebody gets the first password, then you got to get the second one too in order to get it off the exchange. And even like when we were talking about that air gap, and we were talking about the thumb drive and being able to use a Trezor or a Ledger or whatever it may be, if you decide to take the coin off exchange, it just gives you greater flexibility and control over your own assets at that point.
Okay. Okay.
You know, I guess you could kind of say like all wallets come with their own key, you know, their own private key, kind of maybe like access to, I said, like that bank vault or whatever, you know, they're all different set of keys that come for each individual wallet.
Mm-hmm.
We had another question in there too, where, again, we can't give tax, legal, or investment advice, but it was sort of an overall question about maybe how much allocating to crypto.
There's no one answer fits all, right? And it probably depends on how, what your conviction is in the space, right? So someone that is fully invested, a full-time investor in the space, they're more likely to have most of their assets in crypto. Someone who's more passive, you know, passive in nature, may be looking at that 1 to 5% allocation, just kind of depending on what type of risk they have and willing to take on.
Definitely. All right.
And I would just expand on that and just to say, you know, kind of what Joe was saying, it's always good to have diversification. If you have precious metals, real estate, equities in your portfolio, having 1 to 3% in cryptocurrencies for the long haul, definitely there's a plus to it. And then also think about it in this regard. There's actually been reports from analysts like Citi where if everyone put 1 to 3% of their portfolio holdings into cryptocurrencies, there's a cap on Bitcoin. There'll only ever be 21 million Bitcoin ever mined. And with those assumptions, if everybody had 1 to 3% of crypto in their portfolio, we're looking at Bitcoin reaching prices of 250, 400,000 easily at that point because of the limited supply.
Yeah. Okay. Good. And again, that's what we like about the self-directed IRA is, as you say, it gives you that ability to get something, and something in particular that doesn't correlate to the stock market, especially in the times like we are now. All right. So I think you guys were expanding on those questions because you wanted to avoid this next one. What's going on in the market?
Wow.
You want to go back to...
No, that's good. I mean, I think what's going on, you know, just my take, what I've seen is, you know, typically in market cycles, you know, when there's some fear that comes into a market, people first sell whatever assets are liquid to move into cash. And that's why earlier in this year, we've seen the stock market and crypto get sold off, you know, early, where now maybe we're starting to see the sell-off in real estate occur later because it's less liquid and takes a lot longer to occur. With the printing of money and the prices of assets, we definitely have gotten ahead of ourselves over the last 24 months. And so I think it's just a natural part of the cycle for this correction. And, you know, in the next year or two, I think this presents great opportunities to acquire assets at greatly discounted prices and hold them for the next 5 or 10 years.
Yeah, I would say, you know, with me, looking at the different cycles, I've been in the space for 7, 8 years. I remember investing in multiple ICOs back in the day, probably not looking back on that time, not the smartest investment that I could have made. But I think almost in this cycle going through, one of the primary issues was risk. I think that people didn't really manage risk properly. So what happened was there's a lot of firms out there, because they talked about this limited supply of Bitcoin, where they would actually borrow the coin. They put up collateral and they would borrow the coin. And they were giving out an interest rate for it and so forth. And what happened was that when this market was eroding and there was issues behind it, where they would normally sell off their collateral to flatten out the position, they allowed them to go below that level and continue to erode into their margin account, at which point it actually caused several firms to default. So I think that there needs to be better, I think the lessons learned almost from this cycle is really learning how to manage risk. We've seen some firms like a Celsius and a BlockFi and even Genesis having problems, but the first two of them have had insolvency problems. They've had to look to have others invest in them to keep alive and afloat.
Yeah. Would you say that you know, there's any factors that people need to be aware of specifically that can that would be unique to volatility in the crypto market, or something that could cause a disruption?
I mean, you know, maybe one of the biggest things being talked about right now is just, I guess you could say, is regulation, right? That's probably the biggest thing right now. What tokens are going to be put on the CFTC side, or what are going to be put on the SEC side? What's going to be considered a security? What is not? I think that's maybe some of the biggest risk that's overhanging right now, and that's what's holding up a lot of the institutional flow into the space.
Okay.
Yeah, I'd have to agree with you on that front. I think that there's just, I think the institutions need more clarity in the space for them to be successful. And then also with any other asset class, with maturity comes new products. And as we see futures products come out, I mean, we're working on right now requirements to launch options in the new year. These give these institutions the ability to hedge risk. And that's where the maturity is going to come from. And that's why these new participants will eventually come there, like BlackRock.
Got it. Let's talk a little bit about regulation. What is kind of on the horizon or the outlook with regard to that? Anything specific that you guys are watching or taking note of?
I mean, I'll just say for the last few years, it's a continuous ongoing thing within the community that the regulation is coming soon. So, our government, obviously everyone's fairly aware that they move slowly, and they're taking their time with this. And I think they're watching out to see what's occurring before they ultimately put any laws in place. But I think we have been making some progress. Some of the senators have been putting in requests, or I guess you could say have put in certain stuff about like USDC to try to get that approved. So I think there's actually action occurring, and we're moving in the right direction. Next couple of years, that should come to fruition.
Yeah, and I mean, just to expand on Joe's comments, I mean, here we have the president 6-9 months ago coming out with an executive order to do research on the space. I mean, for it to have the eye of, our executive leader, it means that it's actually getting the focus of a much larger audience. And like with anything, as that space matures, it's going to require regulation and needs, where does the SEC fit in this? Where does the CFTC? Is it a commodity like most people think it is? And all those pieces are going to shake out over the coming months into years.
Okay.
And then we probably also got to, at some point also understand how we're going to view it from a jurisdictional standpoint, right? Because where is that project really located? What servers, how are they going to even analyze that? So that'll be interesting over the next few years, how they look at that.
Absolutely. I think that's one of the challenges for the government is the fragmentation of the space. You have certain rules within the confines of our country, but Asia and Europe and even South America view it in a completely different light. So there's a lack of harmonization from a rules regulatory standpoint.
Got it. Okay. I'm going to pivot over to the chat box where I see a couple of questions here. One interesting one. Do you think it's better to just invest in the crypto, or should you do it with an LLC or do it through the self-directed?
I can touch on that to start. So it depends on your appetite in a sense. I mean, if you're a directed member, you lose some of the flexibility with your investing in the sense that I define it almost like a closed loop. Your money's coming in from Quest. You're buying crypto, Bitcoin, Ethereum, whatever it may be. It's being stored with ErisX. You can't withdraw it. You can't deposit coin or dollars in. And then when you want to exit the position, the dollars are going to go back to Quest. If you have that LLC account, it gives you that greater flexibility that you say, oh, you know what? I want to actually take the coin out. I might want to put it to try to generate yields, maybe in a DeFi protocol, whatever it may be, or maybe kind of goes to what I was saying earlier about I want to have control over the keys. I want to have control over my crypto, and I want to put it in my own wallet and be more secure.
Sure. Okay.
Yeah. To add on, I think it really depends on what you're trying to achieve and what you're trying to invest in. I know a buddy of mine, he's just trying to buy some Bitcoin and Ethereum through his IRA account. So obviously the least friction, best cost perspective is just to take your IRA account and go directly to ErisX, buy your Bitcoin, Ethereum. He'll sit on it for a few years and then he'll sell it at some point. Now you might have another investor that is, okay, I want to buy a multitude of different coins that are available on multiple exchanges, and that's not maybe available through the IRA account. And I also want to invest in other funds in the space, and I want some type of protection. And so maybe you'll go the LLC route that way.
Exactly.
Great. I think we were touching a little bit on the process for purchasing it with the IRA and through the platform. But the second part is interesting too. Are there any kinds of minimums that you see typically, or that ErisX has?
There are no minimums to invest right now.
Yeah.
And then if you were going to invest, there's two platforms through ErisX. The first one being for those that just feel a little overwhelmed by trading and seeing a full-on trading user interface. There's a simple interface there. When you log into your portal, it says, hey, I want to buy $500 worth of Bitcoin. This is how much you would acquire. You hit the button and it's in your wallet. And then there's another option on the screen to hit trade at the top of the screen. And that gives you a full-blown trading UI. So if you want to work an order, look at charting and time and sales, you have that opportunity as well.
Awesome. Awesome. Another question. Which coins are most widely used? And then sort of rank them from there, it looks like.
It's an interesting question there. Well, widely used. Well, I guess if you go, let's say Bitcoin and Ethereum are probably the most widely purchased, and definitely USDC is pretty widely used from a payment standpoint and conversion and purchase of crypto itself.
They all have different use cases in a sense, though.
Okay. That's
like Bitcoin being a store of value, USDC mirroring the dollar. So instead of moving dollars through the system, it's much easier to move USDC. And then the foundation of ERC20 is Ethereum. So a lot of these apps that are created are built on that technology.
Yeah, a lot of investors right now probably look at Bitcoin and Ethereum as the main two protocols that people are going to invest in. And I'm sure over the next year or two, there's going to be another handful of layer ones that are put into that basket from institutions and everybody that kind of say, here's the blue chip basket. And that's kind of where people are going to start allocating their money from an institutional standpoint.
Yep. And one other place too, if people are looking for information, if you're looking for a cheat sheet, CoinMarketCap actually has the coins listed by assets under management. And you can kind of get a ranking there of the top 20, 40, even I think goes out to several hundred even. Wow. But your primary coins are going to be within your top 20 from an asset standpoint.
Okay. So speaking of the cryptos, John, what's ErisX looking at in the future? Are there going to be some more currencies that are going to be on the platform? And
absolutely. So right now we keep it just to the majors: Bitcoin, Ethereum, Bitcoin Cash, Litecoin, and USDC. I think part of the issue is we were recently acquired by CBOE, Chicago Board of Options Exchange, and during the period from the announcement of the acquisition to the acquisition, there was some concerns about listing new coins. What could be considered a security in that standpoint? And then recently we had some of the events that happened in the market, and it's just given us a chance to take a pause with our coin listing policy. But we do have full plans to actually ramp up over the next couple of months and start to add new coins into the platform.
Excellent.
But just to expand on that too, is we have a very strict coin listing policy that we go through a list of questions that need to be, that we feel comfortable with when we're listing that, to make sure it's not a security, it's not a flash in the pan type thing where, hey, let's list Tiger King coin this month and try to run with it. No, we want it to actually have value to the industry and to the trading community.
Right.
Yeah. And when you guys are obviously doing that underwriting, other institutions have a similar process, right? Even Coinbase, everybody. But, when it comes to all this institutional flow of capital in the future, they're going to be looking at the same process. And therefore, it's not a for sure bet, but, there's a more likelihood of that capital going into these same projects that pass these filter tests that will help with the adoption and drive up the price in the future.
Exactly.
Got a question in here from Timothy. It's going back to the regulations a little bit. Best sources for, I guess, the average person to keep up with what's going on, to see the trends, and just for themselves be more cognizant of what's developing.
I don't know. I don't have anything specific offhand, but I would say two places I get them. Some people in Twitter feed, on Twitter, that I kind of would trust, and also a few newsletters that kind of give me that insights of what's happening in the regulation standpoint.
Where on Twitter? Are they people you follow, or
are
there some groups or?
Good question. Like I don't have the specific names offhand right now. That's what I'm saying. But it's kind of curated from Twitter, and then I would have to look in my inbox. But I have a couple of newsletters that kind of give a high level what's happening.
Yeah, I would just, for me, I look at the trade publications that are out there, like Blockworks, CoinDesk, and even simple things like I'll even go at the start of the day and type Bitcoin news into my Google search engine
Okay.
and see what comes up, or type in blockchain, and that kind of gives me the flavor of what's going on in the industry.
Got it. Okay. Okay. All right. So time to look into your crystal balls. What are your expectations for 2023? It's right around the corner.
That's a tough one to answer. I'll let you touch that one, Joe.
I'll go. Now, remember, this can change any day, right? This is only today's opinion, based on what happens in the future, it'll change. I definitely foresee, in the next 6 to 12 months, somewhat of a market bottom that it is or has been occurring in the stock market and crypto market. I don't think if we move much lower that it'll happen for a long period of time. We're viewing the next 12 to 24 months as a great opportunity to be acquiring assets. And typically when you come out of cycles, you want to acquire more of the blue chip assets, whether this is crypto, stock market, real estate, or anything, right? Because usually how cycles work are when you come out of recovery period is that the most desired assets recover the fastest, and then it moves farther onto the risk curve as you move out into the cycle. So buying Bitcoin, Ethereum now for the next 12 months or so, when we have better validation in the market that we're actually on the upside, maybe Bitcoin at 40, 50, we probably start gaining more altcoin exposure to layer ones, layer twos. We think they're still going to be important in the next cycle. And, from there, we start looking at, assets in the gaming, metaverse, et cetera. So probably over the next 36-month period, we'll move in that capacity.
Okay.
My take is I just see institutional adoption growing over the next 12 to 24 months. And obviously with the limited supply, it's going to affect the price. And I think that institutional adoption is based on those new products that are coming in and how important it is to hedge risk, because that's very important for an institution to get into a space. So offering those other products like, derivative products like options and also futures is huge. That's how they get into the space. And then also think about it too, you've got Fidelity looking to launch an ETF. And right now the ETFs in the space are based off of the futures price. If we have the SEC approve a product that's based on the underlying, that's a game changer. Just think about it. They have to own all of that crypto to add that collateral to actually behind. That's what happens with an ETF to support that product. And so there would be a sense of accumulation is my point. And even think about it too. For me, I'm on the front line speaking with, banks and trading desks all day long. And it's amazing for me. I've been in this role for 4 years, and the participants I was talking to 4 years ago to today, I'm really having a lot of conversations with top tier banks that are building out groups and divisions that are dedicated to this space. And lastly, I'll just say that, major wholesaler in the business is Citadel. Citadel takes in retail flow from all the big participants that are out there. Ameritrade, E-Trade, Schwab, whatever it may be. They're making a move into the crypto industry, and they're making that move because those customers, those retail firms are telling them that you want all of our business, all the asset classes, you have to be there. So the demand is there. And in my opinion, I just see it growing in the future.
Yeah, I mean, every week you turn around and you literally see another, Fortune, 500, 100 company putting out job listings for people to come work in Web3, blockchain, crypto. So obviously they're, already putting in things in place. I mean, some of these companies are even working on NFTs. I think Ford, someone just told me the other day, Ford's working, this guy got a job at Ford for their department on this. I don't think they see it as today, but I think they see it as it's coming and that they need prepared for the next, let's call it 3 to 5 years.
Exactly.
All right. So the future is bright. We'll just leave it at that.
Mm-hmm.
It has been in America for a long time, hasn't it?
Every time you think it's not, it turns and it ends up being that way. All right. Got a question about the kind of due diligence maybe one should do before getting into cryptocurrency. Do you have suggestions? We've talked about risk tolerance. Anything else that kind of would stand out in your mind for somebody who's looking to get into the space?
I would say if you're going to be looking at some of these altcoin projects, you should try to read about the white paper, see what the product is, what they're trying to develop. And then, when you're looking at a product, is the timing right? I mentioned this a couple of weeks ago at your conference. It's, I saw people getting into the prime brokerage space for crypto 4 years ago, and the space wasn't ready for it. It's, now I'm talking to people like Cowan that are building out a prime brokerage desk, and some other groups where that's because the institutional adoption is coming, and now is the time. So there's many facets that when you're looking at this white paper, is the timing, does it have value to the industry? And then also when you're dealing with one of the exchanges or where you're going to execute these orders, you have to do your due diligence too. Like, I've made mistakes where I've invested or put money in offshore exchanges, not doing my own due diligence, and even had one of them that actually got hacked, unfortunately.
No.
So we make mistakes, and you really need to do your research and even think about it from a regulatory standpoint. Do I feel comfortable being in maybe a U.S. exchange or entity where I know it's regulated maybe from the federal government or the state government, and there's oversight and there's audits going on, or on a routine basis? These are some of the things that you really want to do your research on.
Mm-hmm. Mm-hmm.
Yeah, I think like investing in all asset classes, you either have to, sometimes you pick more of an ETF broad-based approach where you get exposure to multiple assets because you're not sure what's going to outperform. You become an expert in the space, you spend time, and you get to understand everything within a sector, and therefore you make better investments, or you partner up with a team out there that is doing it full time. I think, for a lot of people that I've seen over the last 5 years, they come in, it's a large space, right? There's probably 10, 20,000 tokens. And so you can get overwhelmed very easily. And so I found a lot of mistakes investors do. They come into the space, they learn Twitter's the great place to go, YouTube, they hear everything going on about a certain project, and it kind of, starts building up a little bit of FOMO. They jump in. Typically it's already too late and they lose their money. So you got to take a little bit of principles from even, let's say, Warren Buffett or some of these old guys that, hey, is this something I'm willing to invest in for a longer period of time than just a few days? Where am I getting my research? Would you just go out and make an investment based on someone that posted on Twitter? I think, building that relationship within the industry and knowing what's going on is very important.
Yeah. Now, you've been talking about ETFs and funds and things like that are being launched. You could take that back to, investing in equities, the difference between buying a stock or buying a mutual fund. You've got concentration versus diversification in some of those cases. What kind of distinctions do you see buying a specific currency versus buying into some of those funds that are coming?
So do you have an opinion on the investing side? I could try to touch on that.
Repeat that one more time. So
you guys were mentioning the potential for these funds coming out.
Yeah.
And so the question is just kind of, pros, cons, thoughts on investing in the currency itself versus one of these funds or ETFs.
Yeah. So I guess it's the same, let's correlate. I guess back to what I was just saying is, if you want to make it similar to the stock market is, when you go to the stock market and you look at all the picks available, right, it can be very, very overwhelming. From pink sheets up to the blue chips, there's, 4,000-ish in the US, right?
Yeah.
And, if you are not an expert in a certain market, right, let's say you're not an expert in biotech or software, it's going to be very hard for you to, filter through everything that's happening to pick what's going to be best. And so one, that's where I was saying is, if you're an expert in an area or you have knowledge in an area, start there, right? And go down that, call it that rabbit hole. Look at all those projects in that area, start to see what they're trying to achieve, because you already have some knowledge of what is possible, right? Now, if you don't have any knowledge about anything, maybe you're just like, you want to buy the blue chips, you want to buy some Bitcoin and Ethereum, that's one thing. And then the funds, you want exposure to other asset classes in the space. So personally, myself, we manage typically more infrastructure like tokens. And so for gaming, metaverse, we invested in other funds because that's not our expertise. And you would need another team to worry about that. And so that's what we've done. We've gone out to private funds, we made investments, and that's how we get our allocation. There is some products out there like Grayscale, where they have a blended, large cap private placement that you were able to subscribe before and now trades on, through your brokerage account. I think as ETFs and these products becoming more, let's say, approved, there'll be more, people have easier access to their brokerage account in the future.
Great.
Let me just expand on that. I mean, where you feel comfortable, you pick your spots. And as with anything, if you're going to invest in an ETF, there's management fees there. It kind of goes to what you were saying too earlier. Do you want to have greater control over your investing in your portfolio, or do you want to leave it to an investment advisor that's 1,000 miles away? But it does come down to knowledge and comfort level to what you're doing. If you understand the space, then maybe you feel a little more comfortable taking more risk. If you don't, maybe you want to leave it to the experts to actually pick the right allocation.
Yeah, and there's nothing wrong with taking that passive approach, setting up an account with ErisX and buying a few of those blue chips like Bitcoin, Ethereum. And, it may not have the potential for a 100x gain, but it has less of a potential for a zero, a total loss.
Right. Okay. All right. We're heading into the final stretch here. So all of you out there who are joining us, if you have any more questions, feel free to throw them into the chat box. We're picking them up as they come. One thing, and I did want to ask about, and this is a question that comes up a lot in conversations I've had, is talk about how the valuations get done, period. What is it that, really drives the value per se of a currency?
Yeah, loaded question.
A lot of it has to do with any market. It's supply and demand. It's where people think the price should be, and it's going to affect where your weighting is on the buy side or the sell side.
Yeah, I totally agree there. Also, I'd like to add, where you see most values, like let's take it over the stock market, Facebook, Amazon, Microsoft. It's a matter of how many users and participants have joined those networks over the last 20 years and how they expand. And that ultimately is what has driven their valuation. Because in theory, based on like Metcalfe's law, the more people that join the network, then in theory, the more that valuable the network becomes. So think of it like this. If you have an application that has 10 users, right, it's not nearly going to have the value that has 1 billion users. And so when you're looking at these projects, you're going to want to look at the ad as one key aspect is how many users can come to that platform, and is it sticky, or are they going to stay?
Even think about it with gas. How do we decide the price of gas? Price of gas is decided by us and our demand at the pump. And if Saudi Arabia is going to decide to actually cut off 2 million barrels a day, it's market environment effect on it as well.
Okay. All right. I don't see any new questions that have come through on the box. And like I said, we're kind of running into the last part of the hour here. I think
there's a question that came in for you, Joe.
I see it.
Yeah, I'm not. Does anyone recall that, the 40/50?
I'm afraid I don't.
Catherine, can you just drop in the comment to be more specific, please?
Can you refresh our memory a little on that, Catherine?
Yeah, just to kind of keep things also rolling here is that, the crypto sector and the blockchain and Web3 sector is also a lot broader than just crypto, right? When you kind of come in and understand the Web3, right, there's people building out NFTs. Like I mentioned, Ford is going to be working with NFTs as some type of loyalty points or something to kind of replace that. Yeah, what do you think, John?
What's the question? I'm sorry, Joe.
So
about where I think the space is going?
Just like NFTs, beyond just crypto, Web3, people's.
Yeah, I even look at it. There's so many aspects to it, and I'm even just thinking. You're talking about NFTs, and in the back of my head, I'm even thinking about stable coins, the power of stable coins. For those that know the SWIFT system, which is the international system used by the banking community to move dollars from point A to point B between countries, it's a very challenging process because there's high fees from the banks of up to 1% of the total value being moved. And it could take, depending on the jurisdiction, it could take 4, 5, 6 days to get to that point. But if you think about it from a stable coin, here we are, we're a stable coin. Let's, in this regard, let's say it's pegged to the dollar. And I can actually move that stable coin from, let's say I have, family members in Italy, and I want to, instead of send them dollars or a wire, I move USDC from my wallet to my cousin's wallet in Italy. It shows up in 30 seconds, and he can actually convert the USDC to dollars for maybe less than $1 compared to thousands of dollars if it was a institution moving funds, or if it was moving it from my personal account, it could be a significant fee to move the wire across. So yes, there's a multitude of directions between NFTs, stable coins, Web3. It's just a huge space in regards to the opportunities that are there.
Yeah. So earlier when we mentioned Bitcoin's recovery price back to 40, 50K would probably give some good insight into, when Bitcoin gets back to 40, 50K and volume comes back into the market, it's probably going to get us a better outlook on, the recovery and what's happening in the market. And that's where I would maybe look to add other assets out on, lower market caps, higher risk.
Okay. Well, at this point, why don't we work on just wrapping things up? Do you guys have any final thoughts that you want to share with everybody?
I could kick it off. I mean, I love to look to the future, like we were talking about earlier, in adoption and where I think the space is going and so forth. And I've used this tidbit before, but PayPal, everybody's used PayPal at some point or another, and PayPal made cryptocurrencies available on their platform. When they flip the switch to make that accessible, 350 million people had access to crypto. When Venmo did the same, another 70 million people have access. You've got BlackRock talking about getting into the space. You have Morgan Stanley and Goldman Sachs building out crypto trading desks to support their institutional community. You've got ETF products that keep coming up to the SEC, where at some point they're going to say, you know what, we can't avoid this anymore. We're going to get behind a product and approve it. I just see the growth and adoption in the space coming, and I'm really excited about what's on the horizon.
Yeah. Joe?
Yeah. I mean, if you're just looking to make an allocation with your IRA, sometimes in life, the best things to do is to keep it simple, right? And keeping it simple is maybe just setting up an account with ErisX, going with a few of those blue chip tokens, and sitting back and keeping your hands behind your back, try not to listen to what's happening in the market, and let the cycle play out, another 5 to 10 years. That would be, keeping it simple. And that's usually the best path, sometimes looking back. Yeah. For those that want to maybe dedicate a lot more of their time to the space and doing the work and getting educated, we are in a bear market. I think those that accumulate assets over the next few years will bring, great multiples in 5 to 10 years, and spending your time getting with the right group of people, networking in the space, joining Twitter, joining Discord groups, try to find a handful of people that you can work with to make those decisions. It will help you go a long way.
Joe, I think you touched on something great, like really important. It's the social aspect of it. You'd be amazed by how many crypto meetups there are in even your own town or city. It's amazing. If you do some research online, there are social groups that get together like once a week or once a month to talk about their investments and the opportunities they're seeing.
Yeah, I was at one the other night. I met a guy in the art space. He, it was cool. I met him there a couple of times. He's like, if you want, connect with me and I can help you, if you want to get some of the NFT arts through the bear market. He's like, I know the game, so that's what I mean by connecting with a few people on your team that can also help you do due diligence.
Great. Well, I feel like you're really amplifying what I was saying before. A self-directed IRA is the same as an IRA anywhere else, but you do have those amplified effects that the self-directed offers, and that diversification that you're talking about is really one of them as well. Okay, I guess let's wrap it up right now. One thing Nicole put in the box, which is worth mentioning, is that, we do have our QuestCon coming up toward the end of the year. For those of you who didn't make it to Quest Expo, it was a fantastic event. The QuestCon is going to focus largely on forecasting for things to come in 2023. So that's going to be worth looking into, and more information will be following very soon. Other than that, Joe, John, I want to thank you guys for your time today. I think this has been an enlightening discussion, and I think a lot of people certainly probably learned something new. I know I sure did. And so with that, we'll wrap it up and just say goodbye. Everybody have a great weekend, a long weekend. Hope you get to enjoy, and we'll see you next time. Thanks very much.
Steve. Have a great one, Joe.
Steve.
Pleasure.
John, enjoy.
Thanks, you too.